How's it going, everybody? It's Stas here, and in today's video, we're going to be talking about the markets, breaking down what happened with the S&P, the Dow, and the NASDAQ, and I also want to go over what I personally did in these markets today, as well as a bunch of stocks and ETFs that I'm watching and looking to trade as we're heading into the month of May here in 2020. And as many of you guys already know, we're in the middle of earnings season with many massive companies reporting in this week that we're currently in. So I want to go over what stocks to keep an eye out for, what companies already reported. We're going to go over some numbers in today's video. So if you guys do enjoy it, hit that like button and consider subscribing to the channel. And also feel free to join our Discord chat and our Facebook group if you want to be further connected with the Strive Smart community. And that is linked down below in the description box and is 100% free of charge. So let's get into it, starting off here with the SPX, the S&P 500, which if you guys were watching it earlier in the day, it was actually up about 40 points at one point, 35 to 40 points, as it hit a high at 29.21. And you guys can see clearly based on this daily chart, that did not hold for much time. It actually didn't hold at all. We hit it 29.21, and it pretty much was a downtrend for the rest of the day, with the S&P closing down 0.5% roughly, half a percentage point, down about 15 points on the day. And despite us closing red, this was actually quite a bullish move today, and let me explain why. And judging on this hourly chart, you'll be able to see. So yesterday we talked about how the S&P is finally picking a direction. We finally broke out of the resistance, right? We're making some, there's some upwards momentum now because we were trading kind of in a horizontal channel ever since, I'd say, the 9th to the 13th of this month, right? We've been trading between 27.50 to about 28.50. And with yesterday's big move up towards 2900 and today's pop to 29.21, which is a higher high, this uptrend is still intact. And mind you, we pulled down and we actually held the old resistance from a couple days ago back on the 20th of April as a support. And we actually tested that level twice, or actually 3 times, and we held it all 3 times and heading into the close, and that level again being around 28.50 to 28.60. So this is bullish, guys. The technicals I'm seeing here on the S&P, they're quite bullish. And pulling out here to the 4-hour chart, yes, we did get rejected under this 180 SMA that we've been talking about here over the past couple of weeks on the channel, and this is on the 4-hour chart. But guys, still, it doesn't matter because again, we hit that higher high. So at this point, for the bulls to take completely charge here, to take complete charge, we're going to need, the bulls are going to need to break 2900, this 180 SMA. And from there could be a big rally in the S&P, at least from a technical perspective, as that is arguably the biggest resistance that we're seeing right now. So keep an eye on that 180 SMA tomorrow, guys, especially as, again, these conglomerates, these big companies are reporting earnings. We saw Google report about 30 minutes ago. Their stock is up a lot right now. We'll talk about that in a couple of minutes. So just keep an eye on these companies, because if they do well, their stocks do well. You know, the S&P should have no problem breaking out of 2900, because at the end of the day, the S&P is comprised, a lot of the weighting in the S&P is comprised of these, 5 major companies out there, Apple, Amazon, Facebook, Google, Microsoft, Netflix, etc., right? So the Dow Jones today ended up going down 32 points, not as bad as the S&P. down about 0.13%. And just like the S&P, we saw bullish momentum today, right? We actually popped above 24.2 momentarily, as that was a major resistance we talked about, over the past couple of videos and yesterday. So we did bust above that, which was very, very bullish. You guys can see we hit 24.5, so well above that 24.2, and we ultimately failed that, to hold that point 24.2 as a support. But overall, the fact that we're holding 24,000, that is a decent sign here for the bulls. That's a pretty good sign. As you guys can see on the 5-day, 5-minute, we are holding the trend overall, the uptrend, as the Dow did hold the 180 SMA heading into the close. So for the Dow Jones to completely burst out here from a technical perspective, it's going to need to break 24/7 into the 25K level, as that would put it above the major moving average here, the 180 SMA on this 4-hour chart. And when it comes to the NASDAQ, as you guys can imagine, as we can see, all the tech stocks here, they didn't do well. None of the big tech stocks were green today. So the NASDAQ didn't do well at all. Down about 160 points at the close, down almost 2%, down 1.81% to be exact here. And we got rejected quite hard here by the 89 to about $9,000 level on the NASDAQ, which I've been saying on this channel, it needs to break there for the bulls to take, full charge here. Although the bulls have been in charge, for this to continue, 9,000 needs to break. And you guys can see momentarily, we tried to break 8,900, 9,000 this morning, but it didn't last. We dropped pretty aggressively from 8,900 all the way down to 8,600. The NASDAQ shed about 2.5%, 2.6% from top to bottom today, which is a pretty sizable sell-off. So watch $9,000 on the upside here for the NASDAQ. And you guys can notice the futures for the NASDAQ, I believe they're up. You guys can see we hit 86.50, and from there, since 4 p.m. Eastern, these futures, they're up above 8,700, and I'd credit that to Google, and you guys can see here, Google is up a sizable amount, nothing crazy, but it's up about 3-4% after hours here, and we'll go over some numbers in a couple of minutes, from what they reported. So that's the market update for today, guys. We're very rocky, and it seems like the market is kind of settling down a bit in anticipation of the major companies' earnings reports. And this is putting us in a funky spot, guys, because this could be setting up for the next week to be a very interesting week, because once the market digests this earnings information, once we get the numbers from all of the companies, next week we might really pick the direction that we're going to be going in. Although the bulls are in charge at this point, I feel like next week or even later this week, we're either going to burst through 2,900 on the S&P, which again is a major resistance, or it's going to tank there, and that is if these major companies do fail to do well on their earnings, and their stocks end up tanking because of that, which again would drag down the market, since they have a lot of weighting in the S&P, the NASDAQ, and the Dow. So let me know down below, what do you guys think? I would love to know what your thoughts are on the markets. Don't be shy. Let me know in the comments, plus any stocks or ETFs that you are personally trading. So for me today, guys, it was not the best trading day by any means. I actually took a loss in NAT. And if you guys were in the chat this morning, I posted that I ended up getting into NAT at about $8.30. I believe the exact entry point, looking at my notes here, was $8.29. And you guys can see the stock now is at $7.34. So that position, obviously, it didn't do well, right? And you can see on this daily chart what exactly happened here to NAT. And honestly, guys, this was my fault. Obviously, like every mistake is in the market. It's no one's fault but your own, right? And I got into this because of the hype. I kind of got not a case of FOMO, but I noticed the hype this morning on NAT. It obviously rallied up to $9, and I figured at this point it was up 20%. It started pulling down aggressively down to about $8, and I figured as it held this 50 SMA this morning, hey, I might get in on this pullback, and maybe I'll ride the wave back up to $9. This was kind of the hype getting to my head a little bit, and I pretty much got trapped. I got in at 829, right around here on this pull down. I thought it was a good move at the time, but obviously looking back, it didn't turn out great. And ultimately, I ended up stopping out at about $8. I didn't have a actual stop loss. I used the mental stop loss with this position. I didn't put too much money into it because it kind of is one of those, I'd say, riskier stocks, more hype. It's moving up very aggressively, very volatile. So I don't like putting a lot of money into something like this. So I let it ride. I let it ride a little bit, but ultimately when it got rejected at $8.50, started to push down into the $8, low $8 range, I figured, let me get out of this. Let me take the loss. And that's exactly what I ended up doing. And ultimately, guys, that's all I did today. I was looking at SPCE for an entry point, Virgin Galactic. Ultimately, I didn't get it. It was very rocky, very volatile throughout the session today, so I didn't want to force anything there. CCL made a pretty solid move. We'll talk about that later. I missed that as well, which, I am kicking myself in the butt a little bit, but that is okay. Ultimately, guys, not every day is going to be green. Not every single day you're going to you're going to make trades. Some days you don't trade. Some days you make money. Some days you lose. That's just how it ends up going. And if you guys don't recall, I'm also in GDX options, which GDX is a gold miners ETF. I'm bullish on gold here in the short term and gold miners. And I'm in. If I recall correctly, I'm in the August 21st calls right now, $35 strike price, and with the contracts that I have remaining, I'm up still about 55 to 60% on those. I actually locked in profits on some of the contracts last week when they were up about 80 to 90%. And if you guys wonder where I trade options, I personally use Webull, and I actually have an affiliate link down below in the description box. You can actually get 2 free stocks. One of them valued up to $1,400. All you have to do is put in $100 into the account. And I personally love Webull for options. And guys, expect a video coming very soon breaking down the basics of how to trade options on Webull. That video is coming. So make sure to get your 2 free stocks, again, linked down below. So for me, that is all I ended up doing today. Took a loss on NAT, missed entry points on SPCE, CCL, and I'm just riding those call options. That's all I've been up to in today's session. And yeah, I'd love to know what you guys have to think about that down below, what you guys are working with. I would love to know. Now, let's get into the meat and potatoes of today's video, as, again, many of these big companies are reporting. So the first stock I want to talk about here is Google, guys. Ticker symbol GOOG. And as you guys can see, this thing is going bananas after hours. Up, down, up, down. You guys can see these candlesticks are looking pretty funky, right? And when it comes to Google, they reported Q1 EPS of $9.87, and this actually came a bit short compared to estimates, which were about $10.33. And the revenue, which I'm assuming why this stock is pushing up, they made more money than they were expected, than the analysts expected. Revenue came in at $41.16 billion versus the $40.38 billion expected. So this is why. This could be a reason why the NASDAQ is pulling up a bit here after hours, as Google is a massive company. Another stock here that just reported, guys, and I've been telling you I'm looking at this one in particular as it does kind of represent consumers across America. Starbucks, and I know it doesn't really represent, consumers to a perfect degree because not everyone does go to Starbucks, but still it shows you kind of what's going on with demand for restaurants, at least for one sort of restaurant. And Starbucks today, they actually just reported earnings. Q2 adjusted EPS of 32 cents versus 34 cents estimated, so they missed there on EPS, and they actually beat on revenue. $6 billion revenue versus the $5.89 billion expected. And on that earnings report, the stock is actually down. We were trading at $79.60, almost $80 right before the market closed, and now it hit down to about $76. And this could be because they told us, based on these notes I have here and based on what I saw before recording this video, they think, and this is pretty obvious, guys, right? They think the CV is going to, the impact is going to intensify in quarter three, right? Which is the quarter that we're in right now. And that makes sense, as the United States is still pretty much on lockdown, and all the states around here, and that's pretty much common sense that this quarter is going to be bad. But they think the quarter afterwards, quarter four, is not going to be as bad. The CV impact is going to be a bit more moderate. So that is what what I think, at least, is pushing down Starbucks' stock at this point. And another company that actually did very well in terms of their earnings this morning, 3M, guys, ticker symbol MMM. They reported EPS, get this, guys, of $2.16, 216, versus the $2.03 estimated. So they crushed on EPS there. Revenue came in at $8.1 billion versus the $7.91 billion expected. So they beat on EPS and they beat on revenue, and the stock ended up going up today about $4, up 2.58%. And MMM, guys, 3M here, they're doing great when it comes to technicals. Very bullish here. We actually are right at a critical level right here, I'd say, at about $160, where I can see this thing rallying up to the next resistance being at about $166. So keep an eye on this window tomorrow, guys. If we're able to break 159, 160, and if we can hold that, that could be a good entry point, in my opinion, here as a short-term trade for 3M. And when it comes to another industrial kind of company here, Caterpillar, ticker symbol CAT, they also reported earnings. EPS came in at $1.60 versus the $1.69 estimated, so they missed on EPS. Revenue came in at $10.6 billion versus the $10.92 billion expected, so they also missed there on revenue. So double miss for Caterpillar here. Pre-market, they reported the earnings, and the stock today, it didn't do much. It didn't really go up too much on the news. Well, I mean, it kind of did, 118 this morning, but overall, from 118 down to about 113, that's kind of where we were trading today for Caterpillar. It did offer some day trade potential for those that were looking at it, but overall, it ended up going up 26 cents, up about 0.25% on the day on that double miss there. And when it comes to some other companies, not going to go too in-depth into these, but AMD is also reporting. I believe they already reported, and would you take a look at that? The stock dropped like a brick, down from $55. Now it's at $52. I didn't write what they reported in my notes because they reported after I started filming. So let's see what they reported here. Q1 adjusted EPS of 18 cents, which is in line with expectations here. Sales came in at $1.79 billion versus the $1.78 billion expected. So right in line there with EPS and revenue, and I'm trying to figure out kind of why this stock is going down here. Here we go. AMD earnings hit the target, but take a look. trimmed annual forecast, guys. And what do I say all the time on the channel here? When when management cuts down guidance, when they cut the forecast for future quarters, for the future, let's say, full year, that's very bad for the stock, right? And typically, not always, but typically, the reaction to that is a pull down, right? A negative reaction, meaning the stock's price goes down. Not always, again, not always, but most of the time, the stock goes down on a guidance cut, and that's what we're seeing here with AMD. And it's not surprising, guys. Many companies are not even reporting their guidance because they don't know. Nobody knows what's going to happen 6 months from now, a year from now, with everything going on. There's just so much uncertainty. So it's kind of a given that a lot of companies are not even reporting their guidance, or their guidance has been trimmed. So it's not much of a surprise here. And of course, a lot of other companies are reporting, guys. They haven't reported yet, but Apple is reporting in these next couple of days. Amazon is reporting in these next couple of days. Of course, the good old Tesla. You guys are, I'm really excited for Tesla. I know you guys are as well as Facebook. Facebook is also reporting earnings, guys, and they're actually up a decent chunk here after hours. I'm sure that's helping the NASDAQ as well. So overall, those are the main companies. Let me see if I missed any, but those are the main companies that are reporting earnings this week that I'm watching, and some that already reported earnings. Oh, another one is McDonald's. Can't forget McDonald's, ticker symbol MCD. Just like Starbucks, this is a restaurant that I'm actually interested in seeing, how their sales did, EPS, same store sales, etc. So I'm interested in MCD. And Ford, ticker symbol F, I know they just reported earnings and their stock is getting slaughtered. If you guys saw, I believe, did they suspend their dividend? I think they suspended their dividend a while ago, not recently. It might have been recently, but I know GM just suspended their dividend, General Motors. So you're seeing the negative effect, guys, especially on the auto industry. With these companies obviously not selling as many cars, and in turn, because of that, they have to slash their dividends, guys, because they can't pay out the shareholders if they're not accumulating, EPS income, that the revenue's not the same. So with companies that don't have a lot of cash, they have to suspend the dividend. So that's what GM's doing. I believe, if I remember correctly, Ford already did that. So this is a funky time that we're living in, guys. So those are a lot of companies now, again, that reported earnings, that are reporting earnings. And to go over some other stocks here that I am watching, of course, SPCE was not able to get into this one today, but still, it was very bullish earlier on in the day, guys. You guys saw this thing almost hit $19 per share today. We were well above yesterday's high, which was about $18.50. So overall, that is bullish. We hit a higher high. We're consolidating here at a higher low. So ultimately, I want to see it break back above $17.80 to about $18 on SPCE here. That's kind of where I see the potential. And from there up to $19.80 to about $20, I can definitely see that happening. And CCL, we called this out yesterday, and I hate when I call stocks out and I don't take advantage of them for myself. But if any of you guys were able to trade CCL, that's good enough for me, right? If anybody out there was able to make money today, of course, by doing their own due diligence, not by blindly trading, from my opinion, but if you were able to execute on this, good job, because CCL did very well today, up about 11.5%, up $1.50. And we talked about how it was trading in this range between, $12 and about $13.75 to about $13.50. It's kind of been stuck there over the past couple of weeks. And I told you guys, if we make a break above $13.50, $13.60, this thing is likely to fly. And what do you know? it happened. We got a nice break above 1360 pre-market today. This is where I should have saw it. Again, I missed it. It's okay. But from there, 1360, you guys saw it. It rallied all the way up to 1470. So at this point, CCL is back in bullish territory, I'd say, on this 4-hour chart. Now we're peaking above the 180 SMA. So keep an eye. Up to $16, I can see CCL making that move. So to quickly wrap up the video with a couple other ones, Square, ticker symbol SQ, got rejected at about $66. I think that was earlier today, and it took a drop down to about $61. But ultimately, the uptrend, it seems like, is still holding over this 5-day, 5-minute. So keep an eye there. If we make a move anywhere back into 63, 63.50, that could be a great opportunity for SQ. And MasterCard's in a similar situation. On this 5-day, 5-minute, we're holding the trend. We hit a 272 high earlier in the day. We pulled down about $10 per share. The uptrend, again, is still holding. So keep an eye on the 265, 266 break. We can make a move back into the 270 range there. And as always, guys, I'm keeping an eye on good old gold. It was up about 60 cents, or actually, no, gold was down today, but the futures right now are up about 60 cents. We are seeing a bit of a rebound. If you guys take a look, gold was actually at 1729 earlier in the day, pre-market. It fell down to about 1700, and we're rallying back now to where we were pre-market. So that's a pretty good sign here that gold is holding 1700. We retested it. I'm liking it, but overall, I want to see a break out of 1730 to make a rally back up to maybe 1800 before I consider taking a position in, let's say, GLD, which is an ETF that tracks the price of gold. It goes up whenever gold goes up. You know, I think 161, 162, that could be a good entry here for GLD. If gold makes that move to 1800, GLD could definitely make a move to, let's say, 165, 166, and do the math, guys, from 161 up to about 166, 167. That is a decent range of profits. So overall, let's wrap up the video here. That is my thoughts on the market, a market breakdown, some stocks I'm watching, looking to trade, a bunch of companies that are reporting earnings. So I hope you guys found value. If you did, feel free to hit that like button and consider subscribing to the channel. And let me know, what are your thoughts on the market? What stocks are you watching in 6 months from now? Question of the day. In 6 months from now, will the market be higher from where we are today or lower? Let me know down below in the comments, and feel free again to claim your 2 free stocks valued up to $1,400. That is linked down below in the description box, and that is an affiliate link. If you guys do use it, you're supporting me directly for all the free content that I'm putting up here on YouTube, and I really do appreciate you guys for doing that. So again, that's linked down below. I'll catch you all in the next video. Stay safe out there as always. Peace out, guys.